Hey guys, welcome to the channel. My name is Avantika.
And my name is Aman. In this video, we will talk about whether you should buy a new car or you should go for a rented car. Subscribe to our channel if you find any value in this video.
So, this video is divided into three parts, starting with understanding what is an asset and what is a liability and the difference between them. I'll tell you in a while why that is important. This is followed by an Excel exercise which will help you determine which choice is better for you, that is, to buy a car or not, and finally ending with the conclusion. Now, why is it important to understand the difference between an asset and a liability? So see, most people take poor financial decisions because they can't differentiate between an asset and a liability. Now you will ask, what is a financial decision? Well, any choice that you make which involves the movement of money from your pocket or to your pocket is a financial decision. Okay, so now coming to what is an asset. So in simple words, an asset is something that puts money in your pocket and a liability is something that takes money out of your pocket. Now, to understand it more clearly, let's look at some pictures which will help you determine how money flows when you land up with an asset versus how money flows when you land up with a liability. So let's draw some boxes here. So the first box is that of an income statement. If you don't know what an income statement is, don't be afraid. For now, just understand that income statement simply measures your income and your expenses. The next box represents your balance sheet, which basically balances your assets against your liability. Now, when we get an asset, it puts money in our pocket, or you can also say that it adds to our income. For example, if you invest in a real estate and you put up your property up for rent, then you will get rental income at the end of the month. So you can take it as an example of an asset. Now let's see what happens in case of a liability. So similarly, let's draw two boxes, one for our income statement and the other for our balance sheet. So when you land up with a liability, it takes away money from your pocket. So in this diagram, you can see how a liability will just increase your expenses. For example, let's say you have taken student loan. So by default, you will have to pay student loan payments at the end of the month. So you can take this as an example of a liability. So I guess now we have a clear understanding of what is an asset and what is a liability and the difference between them both. But if you are more interested in knowing about assets and liabilities, how to increase your assets and how to decrease your liabilities, I would recommend you a book, Rich Dad Poor Dad. It's my personal favorite. Do read it if you have yet not read it. So the explanations that I just gave you to make you understand about assets and liabilities and how money flows when you land up with one or the other, that is inspired from this book. Okay, so now let's move to the Excel exercise.
In this exercise, we will compare two scenarios. One, if you are buying a new car, or you are not buying a new car but you are using car rent facilities like Uber and Ola. The comparison can be done on two factors: monetary factors, which we also call as quantitative factors, and the other one is qualitative factors or non-monetary factors. So let's start with monetary factors first. Let us assume a person is having two options, either to buy a new car or to go for car rental facilities like Ola and Uber. Obviously, if he's thinking about these two scenarios, that means he's not having enough money upfront to buy the car. So probably he will go for a car loan. Let's say he's planning to buy a car of rupees 6 lakh and is getting a car loan at the rate of 10% for a tenure of 5 years. That means he will have to pay an EMI of 12,748 for 5 years, and final amount payable by him during the 5 years will be 7,64,894. So this will be the total cost of car to him. Along with this comes some other costs like insurance and service costs. Let us assume this to be around 1 lakh for a tenure of 5 years. Then there are some other miscellaneous costs like parking or repairing. You will have to change the tires or repair AC or the brakes. So for that, let's consider a cost of 50,000 for 5 years. After this comes the running cost of the car. Let us assume it will give a mileage of 14 km in the city, and on an average the person will use the car to travel 20 km a day. Now, if we take the price of the petrol as 80 rupees per liter, the petrol cost for the car for a tenure of 5 years will stand at 2,05,714. Also, the car will depreciate with time, and let us say by 5 years the depreciation of the car will be around 50%. That is, if the person wants to sell it after 5 years, it will get around 3 lakh rupees. Therefore, the final cost of ownership for the car will be total amount payable as car loan plus cost of insurance and service plus miscellaneous cost minus price after depreciation, which will come out to be 8,20,608. Now, let us explore the second option. Here, the person will be using Ola or Uber to travel 20 kilometers a day or 600 kilometers a month. Cost per kilometer in rental cars is somewhere around 20 rupees per kilometer. Considering this, per month cost of rent is rupees 12,000, and therefore the rental cost for 5 years will come out to be 7,20,000. So here we can see that scenario 1, that is buying a car, is 14% costlier than renting a car. But what if the person is traveling more than 600 kilometers a month? As seen in this graph, as the number of kilometers traveled increase, the cost of ownership starts reducing when compared to renting. So the decision here will depend on how much you travel on the car. Do note that here we have not considered the cab sharing or carpooling. Surge pricing is also not taken into account. Moreover, inflation is also not considered because it affects both the scenarios equally. Now comes the non-monetary or qualitative factors. Let's first see the pros of having a car. There are some people who love driving. For them, having a own car is better than renting one. Moreover, if you have a own car, it is much more convenient and comfortable. On a rainy day, having your own car is much more convenient than hiring a cab. You just have to pull out your car from the parking and you can move ahead. During times of medical emergencies, your own car is very handy as compared to hiring a cab. You can get better privacy and security in your own car. Moreover, your own car is linked with pride, emotions, excitement, and passion. It is a status quo for many people. You can also customize your car as per your need. Let's now talk about some of the cons of having a car. Let us suppose you're going somewhere and suddenly your car breaks down. Just imagine how much inconvenience this will cause to you. If you own a car, you will also need a parking space. So every time you go anywhere, you'll have to search for a parking space. If you are buying a car through a car loan, it will be an additional liability on you. Buying a car may affect your other financial goals. Let's now talk about some of the pros of renting a car. You can book a hatchback, SUV, sedan, etc. as per your need. It is suitable for those who don't like driving, who just want to sit back and relax and let the driver drive through the traffic of the city. So for them, having a rented car is beneficial than owning a car. Now let's suppose you are going somewhere and your rented car breaks down. What will you do? You will simply switch to some other car. You don't have any botheration of the parking space. Let's now talk about some of the cons of renting a car. Whenever you want to go somewhere, you will have to book the cab and you have to wait for it. Many times these long waits can become very irritable. Having a rented car is not that secure as compared to having a own car. Moreover, it will make life difficult during emergencies or when you are in hurry. So these are few factors which you should consider while buying or renting a car. Let's now connect it with what we have learned in part 1. Is car a liability or an asset? As per the explanation given in part 1, if you are owning a car and you are using it for personal use, then in that case you are not earning anything out of it. You are not earning any income from the car, but instead you will have to pay for the running cost, for the petrol, for the maintenance and servicing. So in that case, your car is a liability for you. But if you are using it for rental services or you are lending it to someone and getting money out of it, then in that case it becomes an asset for you.
Okay, but if we speak in strict financial terms, a car is a depreciating asset. So let's take an example to understand this. Suppose you purchased a car for say rupees 6 lakhs. Now after 5 years you plan to sell it. Suppose you are successful in selling it and you got around rupees 3 lakhs by selling that car. So you earned some amount by selling that car, but it is obviously less than the price at which you purchased it. Hence, a car is a depreciating asset. So that's it guys from our side in this video. Thank you for your time.